All right, it's February 11th, 2026, and we have to talk about gold. It has been an absolute bloodbath, but for now, the selling has stopped. The question on everyone's mind is simple. Is this just a dead cat bounce before the next leg down, or is the bottom finally in? Let's get right into the data. Look at that number, $4,900. Gold hasn't just pulled back, it has crashed. After days of absolute panic, the price has finally, maybe, found some footing right here at this critical level. For the entire market, this is the line in the sand. And that leads us to the only question that matters today. Are the buyers who just stepped in strong enough to hold this line? Or is this just a brief pause before we get another wave of selling that takes us all the way down to 4,500? I know, the fear is real, so let's cut through the noise and look at the charts. To figure out where we're going next, we first have to appreciate just how violent this move has been. This wasn't some gentle, orderly correction. No, this was a full-blown reset of the market. I mean, it's pretty wild to think that just last month in January, gold was screaming at all-time highs, up around $5,600, and then, boom, a massive wave of forced liquidations, pure panic selling, and it all came crashing down. Traders are already calling it the Great Metal Flush. And here's the thing, the damage wasn't just in gold. Just look at these numbers. Gold's down 16%, which is bad enough, but silver got absolutely hammered, down 36%. And Bitcoin, a staggering 40% haircut. This tells you it wasn't a gold problem. This was a massive cross-asset deleveraging event. When the margin calls came in, people just had to sell anything and everything. So, with all this chaos, how do we find any clarity? Well, we zoom in. You can forget about the daily and weekly charts for now. They're a total mess. The real story, the hand-to-hand combat between buyers and sellers, is happening right now on the 4-hour time frame. Think of this as our battlefield map. The 4-hour chart cuts out all the long-term noise and shows us session by session who's actually winning. If you want to navigate the insane volatility of the next 48 hours, this is really the only chart that matters. Okay, let's get into the guts of it. At a huge pivot point like this, you've always got two completely different stories being told. So let's break down the arguments for both sides of the trade, for the bulls and for the bears, right now. And this really lays out the conflict perfectly. The bulls, they're saying, hey, relax, this was just a technical flush of all the leverage, not a fundamental problem. They're pointing to that aggressive buying that showed up right at the $4,700 zone as proof that the sellers are exhausted. But the bears, the bears see a totally broken chart. For them, crashing below 5,000 was a catastrophic signal, and they think this little bounce is just a gift, the perfect chance to sell again before the next major leg down.
Okay, so you can forget 100 different indicators. You just need to burn these 5 levels into your brain. They're going to tell the entire story over the next 2 days. 5,100 is the ceiling. That's the scene of the crime the bears are defending. 4,700 is the floor. That's the bulls' absolute last stand. And right here at 4,900, well, that's the trench warfare. That's the battle we're watching right now.
All right, we've laid out the damage. We've identified the key levels on the battlefield. Now it's time to make a call. Based on all the evidence, what is the highest probability outcome for the next 48 hours? When you put it all together, the data really is tilting the odds in one direction. We saw that waterfall of forced selling, and it looks like it finally ran out of steam. And right on cue, you saw strong, aggressive buyers step in at that 4,700 demand zone. To me, these signals say the path of least resistance, for now, is up. So here it is, plain and simple. The verdict is, buy the bounce. The highest probability scenario right now is not another crash, but a recovery. Now, let me be crystal clear. This is not a long-term bet the farm call. It's a tactical 48-hour plan. The technicals are saying a retest of resistance is more likely than a retest of the lows. And here is your exact, actionable game plan. Step 1 is confirmation. We need to see the price hold above this 4,900 pivot. That's your green light. Step 2 is your target. We're aiming for a move back up to that 5,100 resistance zone. And step 3, the most important part, is risk. If the price breaks and closes below 4,700, this entire bullish idea is wrong, and the bears are back in total control. You get out, period. So the tactical plan for the next 48 hours is clear. But, and this is a really big but, the long-term picture is now much, much cloudier. This whole collapse was kicked off by what the market is calling the Warsh Shock, a sudden hawkish shift in what people expect the Fed to do. So while the immediate question might be answered, the billion-dollar question remains. Has that shock permanently damaged the long-term bull case for gold? That is what we'll all be watching.